Alright, so this is how I start my morning. It is 8:58 Eastern Standard Time. So 9:30 is when market opens, so 32 minutes from now. I just sat down. Now I'm going to do some top-down analysis and determine my bias for the day and read market narrative and try to understand what's going on. So I start out on, this is my trading chart. This is where I do my top down analysis, but I have this separate chart up here. So I have two charts I look at. This one is my weekly chart, but it's on the 30-minute time frame. I mark out the midnight level of every day, and then I mark out the high and the low of every day. So that way, when I go into the next day, I know where I'm sitting at, if I'm in a premium or discount of the previous day, and if we've swept a high or low. So basically what I'm looking at here is we've been running, the trend right here is bearish, and then we had this major reversal here. I guess we swept a significant level or not. Maybe this one right here, and then started reversing higher. I think actually on ES took the weekly low a little bit later than NASDAQ did, so NASDAQ kept running down. But anyway, we ran up and then we basically covered this gap already, and now we're continuing to be bearish. But we are in a discount from the previous day, so we swept this previous day's high and then we dropped down lower. So do I want to target previous day's low right here? That would be nice, but it's hard to go short when we're in a discount. So this already is low probability to me. So let's go ahead and map out the narrative. So I'll start here, go on my monthly chart. We've been stuck in this little range. We went up, and then now we're kind of chopping in between this range. Significant levels are here, previous month's high, previous month's low, which we're still stuck in that range. So that's it for the monthly. Weekly chart, here's the previous week. Previous week high, previous week low, we already swept. I took it out because we already swept it, so it is of no significance to me anymore. But I'll leave it on there for charting purposes. So we've been stuck in this range, as you can see. This is the weekly chart, took out this weekly low. So let's look at this wick right here. I'm gonna reverse that. So we dipped into this discount of the wick, and then we started reversing. We don't necessarily have to take out previous month's low to have a reversal. What I'm noticing from this wick is that we're respecting the discount. We're likely to stay closed above the equilibrium, and we're in a premium, so this can actually be flipped to a discount, so now we can go long. So my bias for the day is definitely going to be looking for longs. I'm bullish. We've swept this low. We entered the discount and started coming back up, and now this can be treated as a discount, as this we are sitting in a discount. So now let's go to the daily chart. Let's get rid of this. Previous day high is this London high. Previous day low is actually right here. So we ran up, we've come back down. This is like a nice little market maker sell model. It does seem likely that this is the target actually. This is a tricky chart for sure. We're in a premium here. Yeah, so we could be bearish. See, this is why I consider this low probability. If it's difficult to read, even for me, it's not my trade. So, but I mean, just to keep things simple, we took out this high, we took out this high, we came down low here, we didn't take out any lows. So it's definitely ideal that we are going to take out these lows. This is a little order block right here, which is the new week opening gap. We've came up, almost tapped it, and now we're coming back lower. Let's check this out. We stay low, 219. Yeah, this is a nice little market maker sell model. Distribution, accumulation, second stage distribution, accumulation, first stage distribution, accumulation, distribution. This is accumulation, manipulation, distribution, accumulation, and then likely distribution to the downside. Any significant levels on the hourly? No. I know we took out a 4-hour high right here. Yeah, we took out that high. Now we're staying close below that. So let's look at the 4-hour candles, right? This is 2 a.m. We're staying close below that. Swept this high, distributing lower. Previous day low definitely looks like the ideal target for today. So 25,219. Let's go ahead and look at this. All right, yeah, look at that. We have this change in state of delivery right here on the 30-minute. Price then came back up, tapped it, and now we're running lower. Yeah, this is clean. So if I'm gonna catch this short and target previous day's lows, I'm gonna want a little bit of a retracement here. Probably to this 15-minute order block, which we might get near the open. So it is not it today is the 4th. So I'll mark out midnight level. Now this is what I'm doing to read market narrative as well. Midnight, 2 a.m., 5 a.m., 8 a.m., and then 9:30, so I know where market is gonna open. Let's zoom in here. So now I mark out the midnight level. We opened right here. Midnight. London low is between 2 and 5. This is the lowest low. This is the high, London high. And I'll delete those lines. Keep the chart nice and clean. I'll delete these order blocks. This was a nice entry. Go down. Here's another one. Price is likely. We took out London lows here, so price is likely to come back up. If we hit this, I'm definitely going to be looking for a reversal, looking for an entry to go short. Yeah, a lot of low resistance liquidity right here. This is on the 15-minute. Check out the 5-minute now. 5-minute, we do have this one. We could retrace back up into. It is staying close below that. Ideally, if I'm gonna take a short, I want to be above midnight. Above the midnight candle. If I want to take a long, I want to be below the midnight candle. So we're in a premium. It would be nice. It would be an A+ setup if we were in a premium and we were above the midnight. Then going short is just optimal, and then vice versa, the other direction. And that's basically it on how I look at daily profile, market narrative, and now I just wait until 9:30. So let's look at what happened here. Market opened here, and we were right here. We're coming down. This is definitely what pre-market likes to do. It likes to manipulate traders, likes you to get in early, so that way when market opens, it manipulates, likely takes you out of your position, and then distributes to the initial target. So I know a lot of fair value gap traders probably took this fair value gap, maybe thought it was an inversion on the 15-minute. This is the 15-minute. And probably tried longing because we were in a discount and we're below midnight. But previous day's low was definitely a nice target to hit. So what, like I said earlier today, was I want to see price come back up into this 15-minute order block right here. We didn't hit it, but we were just about near it, and it's more of like this. So technically this was still a valid retracement into there. I just don't like how large 369 to 418.20. So that's 50 points. That's just too big for me. So I try to go off of the bodies more than just the wicks. It's like a general gist of it. Anyway, I usually like taking early entries near order blocks or fair value gaps. It depends on the setup and what I'm looking at. This one I would have not taken an entry just on the fair value gap. I definitely saw this order block up here and I really wanted it to touch it. It didn't touch it, but it would have been nice to. I was waiting for more of an entry over here, but there's no order block here for me to like really for price to really go to. I mean, here's this one, which it already touched. I didn't trade today. This just wasn't in the cards for me. I would have definitely looking to take a short if we would have ran up a little higher up here. But then again, at that point, that's too far. That's too much manipulation. And at that point, the risk is too great. Like we're here at 460 and this is, yeah, that's like 50 points of a stop loss. That's just too much for me. I don't prefer it. This was low probability to me, but it's nice to do the analysis and see it play out a certain way that you wanted to see it. So not every trade you analyze is going to be yours to take, and you got to be okay with that. Otherwise, if you're going to try to take it, you have, the possibility of losing, and I don't like losing, to be honest. I did it a lot when I was learning how to trade, and it's very an emotional roller coaster. So I'd rather avoid a trade than try it and take a loss from it. That's just me. I've been through too much. And then we kept on running lower to these lows right here. We had a reversal here. It might just be a retracement. And we'll come down to this weekly low. That's my kid, and that's my sign. Good night.